What is up, guys? Hope you guys are doing well. With the market being closed today, people had a long weekend, so I think tomorrow they are ready to get back into the swing of things. I'm thinking tomorrow we see lots of volume and money flow back into the market, and then by Thursday and Friday the economy brings us back down to reality. In today's video, I want to share some stocks that I will be watching this week and give you guys a few reasons why. I do own some of these stocks as the long-term plays in the public portfolio, but I will not be touching those positions as of now. This video will be from a short-term perspective and how I could play them in one of my other trading portfolios. The time frame for this is specifically this week and next week as we approach the end of January. Before we get started, these videos do take a while to make, so please consider smashing the like button and consider subscribing to the channel if you guys find these videos helpful. And with that being said, let's get started with today's video. Even though the US markets were closed today, the rest of the world did have their markets open. I like to follow the European market. If you take a look at the European indexes, you can see that all the indexes are positive for the day. Now they're not up huge, so I'm anticipating it was some sideways trading for most of the day, but that is still better than having a red market. So this could be some positive optimism leading into tonight's futures. Also remember, there are more banks reporting earnings in the morning, so that will definitely set the tone for the day. JP Morgan's earnings weren't great, but Wells Fargo did outperform their earnings, so kind of a mixed bag. So I think tomorrow will definitely give us a better idea of the earnings coming up in the next month. But just want to share with you that European did hold its own today, so hopefully that gives us what we need going into tomorrow. The first stock that I'll be watching this week is Opendoor. Ticker symbol is OPEN. It is trading at $11.56. It is down 4% for the day and another 1% after hours. The main reason I like this one is because it is trading near the 52-week low. So there is a lot of upside with this. And I already did make some great returns on some calls this week. I'm hoping to find another opportunity this week, whether it's with shares or maybe more calls. But I really do like the market cap on this. It only has a market cap of 7 billion, and I think for its quarterly earnings, it's bringing over 1 billion in revenue. So the valuation is very attractive. So in my opinion, a very good play if we can get a bounce off of the market. I think the safest route for this one would definitely be shares, but if you're feeling a little riskier, you can definitely get some longer term calls. Maybe a month out, I think you can flip those, make some decent gains. But I'm not a financial advisor, so definitely do your own research before investing. Before we move over to the chart, I do want to share with you guys a recent Zillow article that came out today. According to them, the housing market in 2022 is going to stay hot, especially in the Florida states. They have 3 Florida cities that are going to be in the top 10. Zillow also says that the markets in Sunbelt have historically not been sensitive to the rising mortgage interest or even the slow enough stock markets. As a result of shifting demographics and continuation of inflation, the price for monthly rent and mortgages have risen across the country. In the hotter housing markets, it's even more noticeable. So in conclusion, there aren't enough homes available to sell and meet the demand of the number of home buyers looking for somewhere to live. So essentially, there are fewer sellers willing to sell, fewer homes are being built by the builders, and the demand is still sky high. Last thing on this article I want to share with you guys is the increased demand along with home building unable to keep up due to the material shortages caused by supply chain issues means that the inventory will likely remain low in the foreseeable future. So I think with the low inventory and high demand still in houses, I think the prices in houses will continue to go up and hopefully keep the housing market hot until 2022. And that should reflect the stock price in some of these stocks and companies. But that's just what I think. Let me know your thoughts in the comments below. Moving over to the chart, we are on the daily here. It looks like we are in a channel of some sort. We are above the midpoint, which is good, but it also is a critical point that is currently lining up to our support, which is up to our monthly level here. So we are in a pretty critical spot, but I think if the indexes can bounce pretty strong, then I think this will bounce off as well. And that is because we could form this potential double bottom here. And so with a strong bounce in the indexes, we can easily get back up to about $13 to touch last week's high. And then if we hold this support here, we will actually get back up to the monthly. Moving down to a smaller time frame, you can actually see this better. We came down, bounced off this support, tried to break the resistance, came back down, and so now I am thinking we come back up to about almost $13. But keep in mind, we do need some strong indexes for some of this to kind of work out. Before I move over to the next stock, I want to show you guys the 30-day implied volatility for Opendoor. This is historical data of its IV. If you take a look, we are trading around 80 points right now. The historical data does show IV of up to 120, and that's across a few different occurrences. You can look around March, late August, and also in November. So there is some upside with this, but I thought I would just mention that if you're thinking about getting calls for this. The other one that I'll be watching closely this week is Robinhood. It is at $15.17. It is up a little bit after hours, but overall compared to its history, we are near the 52-week range. I do own this one in the long-term public portfolio, but I do want to place some calls or maybe some shares as a swing trade. I think Robinhood can have some big moves this week just because they did expect to have announcements of their beta version in mid-January. Robinhood Markets will launch the beta version of its cryptocurrency wallet in mid-January. They tested our first iteration of crypto wallets and shared detailed design and functionality feedback with their team to help us deliver a top-notch experience. There's a big demand for the crypto wallet. 1.6 million people are on the wait list for the new feature. The wallet's beta phase will roll out to thousands of customers from the wait list in mid-January. Robinhood also said we will be sharing more information on the beta program in the coming weeks. This announcement came out at the end of December. Today is January 17th, so we have the remainder of this week and the next week for them to announce something on the crypto wallet. I believe they also do have earnings next week, so a lot of catalysts coming up within the 2 weeks, so that is why I'm putting this one on this list. In my opinion, they do an update on the crypto wallet later this week. And then on earnings, I think they go more in detail of what their plans are with the wallet. Hopefully they don't announce a delay, because that would be very bad for the stock. Even though it's already down to its 52-week low, that would be very bad. Moving over to Robinhood's chart, I did draw this channel as well to give us a better idea of our price range. As you may be seeing with other stocks, this one also has a potential double bottom here. The first thing will be definitely to get above $15.50. That is our weekly level here. And then we'll need to work to get past this descending resistance and work our way back up to $18. $18 will be a big resistance. You can see we have a lot of consolidation here. So this is going to be a very strong resistance, but once we get above that, we will probably get above the 200 MA, and that can possibly help indicate the end of a downtrend. But as of right now, we definitely have our work cut out. So I'm hoping that the crypto wallet update and the earnings does help the stock and we can get back above $18. The next stock that I'll be definitely interested in watching this week is DraftKings, ticker symbol DKNG. It is trading at $23.19. Now, I'm a big fan of sports betting, but they also did announce news last week, and I think that can bleed off into tomorrow. Not to mention that the NFL did have their wild card playoffs over the weekend, so maybe that brings some buzz into the stock as well. This one has been down on a teardown, trading near its 52-week range, but like I said, tomorrow could be big because of the news from last week. I am building a long-term position with this one. You definitely have to be patient because it will be a long time until they become profitable. If you watch my last DraftKings video, you would know that Oregon Lottery Scoreboard app is going to migrate to DraftKings Sportsbook. DraftKings will become the official sportsbook provider of the Oregon Lottery, with DraftKings replacing the current scoreboard app. So this was all announced last week, but the migration doesn't start till tomorrow, January 18th. So I'm thinking that DraftKings announces an update of Oregon's migration over to DraftKings, maybe expand on their plans since Oregon is a monopoly, and maybe a forecast leading into NFL's divisional round, since Oregon should be live for all the NFL weekend games. I did make a video that goes more in depth on what this partnership means, so check out that video if you guys are interested in DraftKings. Looking at the price action for DraftKings, the stock price hasn't been too nice to us. We did bounce off of this nice support, which is around $22.50. So I am looking for a bounce off of this support down here to maybe back up to about $25. And then depending on how we react around this level, we can work our way back up to 28. If we fail to break the resistance, then I will definitely see some more downside. Probably coming back down to this 22 level and continuing to trade inside this descending triangle. The last stock that I'm definitely going to be watching this week is Lucid Motors. It is trading at $42.22. They have a huge catalyst coming up this week, which is going to create a lot of volatility in the stock price, and that can create a great opportunity for you to make some money. If I do decide to play Lucid this week, it will most likely be puts, but long term I do think Lucid can succeed. They have a great product. I just think this week will be a great opportunity for puts, but not financial advice. You guys definitely do your own research. But let me show you guys why this can sell off the rest of the week. I was tweeting about getting puts on Lucid this past week, so if you haven't followed me on Twitter, definitely consider doing that. But the catalyst for this week is January 19th. It's going to be a major catalyst for the shareholders of Lucid. This catalyst isn't exactly a positive event. On Wednesday, the lockup expiration for the existing shareholders of Lucid will expire. The current Lucid shareholders earn 1.19 billion shares of Lucid stock. The entire outstanding shares of Lucid is 1.6, so that is over 50% of the entire outstanding shares. As a result, shareholders should anticipate 19 to be an extremely volatile day. The investment fund that holds over 67% stake in Lucid stock is the Saudi Public Investing Fund. It's the PIF. On the 19th, their shares are going to become available for sale. Now, not all 1 billion shares will probably be sold. PIF is a long-term shareholder, so the fund will most likely not sell a significant portion of the investment. But if I was them, I would be crazy not to sell. As you can see, the stock price has gone crazy. I know smart money would probably sell and then rebuy their position at a lower price. When you have such a big stake in a company, you influence the price action. And so by them selling at these levels, they're going to take tremendous gains and manipulate the price down. And then they'll be able to reinvest all their profits back into it. That's just how corrupt the stock market can be. So I do anticipate some sort of sell-off. But again, I do think Lucid can succeed. This is just a great opportunity in my opinion. If you take a look at the last lockup expiration for Lucid, it occurred in September. This was the lockup for the PIF investors. Lucid stock fell by almost 11%. Even worse, Lucid fell by more than 20% the week prior. So almost a 30% lost. And remember, this was back in September, so I think the stock price was trading around $20. So if people were willing to take profits around $25, you don't think that people will take profits at $42? I think different. I think people will start taking profit. Since January 12, shares of the Lucid stock have declined by 7%, but I could see this going down another 10-15%. This could also provide a good buy the dip opportunity. 1 month after the lockup expiration, Lucid was trading 35% higher. So you can actually play this both ways. You can wait to see if there's a big dip and then possibly play it safe and get some shares, or you can get some puts ahead of time. But again, not financial advice. Gonna just give you an example that even early investors will sell for profits. PIF shareholder Magnetar Financial sold 16 million shares of Lucid, or 94% of their position. Magnetar was an early supporter of Lucid and invested 250 million into the electric company back in 2017. They then bought 10 million more shares at the stock price of $15 per share, but now Magnetar only owns just over 1 million shares of Lucid. So as you can clearly see, even some of the earlier investors will take profit. It just really depends how much. At the end of the day though, this can provide an opportunity in my opinion. But let's take a look at the price action for Lucid. You can see that we recently went up to about $48, but we failed to break and hold. That historically has been strong resistance. We actually went up here once, failed to break, went back up again, failed to break. We do have another occurrence back there. So this historically is a strong resistance to get back into the 50s, which then created this selling pressure back down to this weekly level. Moving in closer to some of the most recent price action, we did have a strong bounce off of this weekly level. The level that I would definitely be watching to break is $43. If we failed to break that, we could be forming a head and shoulders pattern, guys, which would be bearish. Then you would be looking at this neckline here, which is also the weekly. If we break underneath that, that would be bearish. We would probably come back down to the monthly level, which is around $38. If we break under and come right back up, that would be a false breakdown. That could be bullish for the stock since it failed to hold underneath the neckline. But in my opinion, with the current valuation and the amount of profits that the Saudi can take at this point, I would definitely anticipate more of a sell-off. But that is just my opinion. Let me know what you guys are seeing in the chart. Definitely do see this possible head and shoulders. I would definitely be watching this 43 level and possibly this breakdown. So guys, let me know your thoughts in the comments below. This is what I'll be watching this week and leading into next. There's definitely some opportunities here, but you guys let me know your thoughts in the comments below. If you guys found value in this video, make sure to smash the like button, subscribe to the channel for more videos like this. I hope you guys have a great day. I will see you guys in the next video, and as always, keep moving forward.